Welcome back, everyone, to the Bitcoin Business Bureau. I'm your host, as always, LitecoinLeader. Today, I'm going to talk about, it's going to be a little bit different. It's just going to be me and you, mostly me talking to you, just me doing a monologue to this camera that I'm pretending is you, to talk about love and money and what that's all about and where I'm going to go with that. So I'm not going to be sharing any screens. I'm not going to be talking about particular stories. I just want to give you a little bit of philosophy and perspective. This is not financial advice, but this is just some of the psychology of how it all comes together. I want to say at the top of the video, because I've been doing better at this lately, I think, but I always forget. Please hit the like button. Please hit the share button. Please subscribe. Please leave a comment. Please share this video with someone who needs to hear it or wants to know more. But I want to talk about love and money, and what this is about. Any investment, and this is not financial advice. I'm not allowed to give financial advice. I'm just a guy talking to a camera, pretending it's you. But if it was me talking to a dear friend who I one, in my opinion, I would say, look, whenever you buy something as an investment or an asset or something, what is the point that you purchase it? You want the value to go up, or at least hold its value, right? So that's the purpose of buying any instrument with your dollars or your other assets or your gold or silver, and turning gold and silver into Bitcoin, or turning Bitcoin into a particular crypto project, or just following any of those investments that you do. So it could be real estate, it could be gold, silver, it could be a collectible, it could be Bitcoin. All these different asset classes that are out there. And the idea is that you want to preserve your wealth, protect it, and hopefully see the value grow, right? That's the whole point. Now, what I want to warn you is that in none of that conversation was there emotion involved. It's very matter of fact. I bought it at X. I hope it stays at X, or goes to X plus Y, and Y is a big thing. So let's say 200% or in a year, whatever. That's what my hope is. But I'm looking. If I buy this pen as an investment, okay, and I hope that this pen doubles in value. Well, that's my plan. I bought that as an investment. So if I bought it for $1 and I can sell somebody for $2, I'm going to do that. All right. At least I should do that. Not everybody does execute that, because what happens is that when you watch the price locally on a particular day or even hour, you're just sitting there watching the green candle stack up. Remember when those days? But the value goes $1.40, $1.50, $1.60. And you're like, well, my plan was to sell it too. So then it gets to 2. And I'm like, wow, it got to 2 fast. Maybe I should hold on. And now you're riding it up. You're getting greedy. Okay. Or the worst, the opposite happens. Okay. So let's say you bought it at $1. Now it goes down to 80 cents, 60 cents, 40 cents. You're thinking about buying another pen or a couple to average out, which isn't a bad idea. If you still like the pen, you still like that investment vehicle, sure, buy more, get your average price down. So if you bought one for $1 and you bought 2 for 40 cents each, so now your average price is 60 cents instead of $1, and you have 3 of them, but you're in for $1.80 now. So now your hope is to get to at least 60 cents and break even, and hopefully go up higher, but you don't need to get back to $1 just to break even anymore. So that's one of the benefits of dollar cost averaging, or buying again on a dip. But what I've seen a lot of people do is that they will fall in love with a particular asset. They may love gold, they may love silver, they may love a smaller crypto project, or a particular stock or let's just say they invest in a gold mine or a silver mine, and they said these guys are going to strike it rich at some point one of these days. What I want to caution you about is falling in love with your investments. That is not what your purpose was. Your purpose was to grow your assets. That's the entire reason that you invest. You take the predominant reason. You want to take that asset and grow it. You want to take $1 and turn it into 2, or pick any multiple of dollars or assets. You want more. You want your investments to grow. That is the idea. But again, I'm not talking about any particular investment, so I'm not giving any financial advice. But what I'm talking about is the emotion of the process on the daily basis. And I've talked about a crypto coma many videos ago, almost many years. I'm actually coming up on my 2nd anniversary on my channel, by the way. I think Saturday is going to be the start of the 3rd year on April 1st. Time flies. Anyway, don't fall in love with an investment. You may just say, let's take for an example, let's say you really love a small project in crypto that you learned about, and you really love the team, you really love the people associated with it. But if you look at it from a hard analysis, and you've heard it from other people too, they said, they don't seem to have the things that people want, like the reason to buy it anymore. Like, I'm going to pick a project. I'm not going to make a real project. Just say project XYZ. And that project XYZ was once $1 now, and then it went all the way up to $20, but you wrote it up there and then you wrote it all the way back down. That's a lesson you need to learn. You need to learn to take profits when it goes up. And you also need to, like, maybe you don't sell all of it because you like the project and so on, but maybe you write it all the way back down and it goes below $1 down to a dime. Now the question is, do I want to buy more? And you got to take a real hard look. And whenever you don't sell or whenever you buy more, every time you look at a project and you decide, oh, I'm going to hold it. Well, you're really buying back in, okay? Because you decided at that moment it's worth investing in still for the future. So you're basically mentally rebuying at that moment. You decide not to sell. So if holding is really buying, but you just didn't have to do a transaction. If you want to buy more, that's another transaction. But when you look at something that is going downward in value, there's a lot of people that say you cut your ties with losers very quickly and you let your winners run. Now, that's a good philosophy in general, but you have to take some profits on your winners too. But if you have a losing project and a project, just say loses half of its value, I don't care how much you love the team. I don't care if you love the logo. I don't care if you love the name. I don't care. Whatever you love about the project. Love is an emotion. You may hate it, you may love it, you may adore the team. All these are emotional words. And we've seen the Wall Street emotional chart. I'm not going to share it right now because I said I wasn't going to share my screen, but you've seen it in my other videos before. The point is, you need to take emotion out of the analysis and just say, well, why would I buy if I started at $1 and went down to a dime? The question you have to ask is, why would I buy it at a dime? Lots of people have gotten out of it because they've been selling all the way down to a dime. So why would I buy it again? That's the question you need to ask. Is it still worth a new investment? Is it just overall market conditions and the project really hasn't changed anything, but everything about it that you liked is still there? It still has a good roadmap. It still has yes, the team matters. Yes, the roadmap matters. Yes, the use case matters. All those things that brought you there matters. But if you see things that like, well, this isn't working, this isn't right, that not many people are coming to it, and in a down market, not everybody's going to survive in the down market. We've seen it in the dot-com burst in 2000. We've seen it at the turn of the 19th, 20th century with so many car companies that went belly up. We've seen it with a lot of companies that make computers. They're mostly all gone now. But so it happens. It's like we get to something is really popular. Lots of companies rush to make that object. There's probably only 10% of that winds up being winners, and the rest of them all fall by the wayside. Don't let your investments fall by the wayside. Always be looking at it and saying, why am I still in this project? And don't ever listen to yourself or have someone listen to you. Ask yourself that question and explain to that other person why you're still in that project. And that person's job is to point out emotional words after they're done listening to you. So something to think about. Investing is not about love. It's not about the love of money. They say the love of money is the root of all evil, but the love of investments is a path to a lot less assets in a really red ledger book. So lots, I probably didn't phrase that well. I wasn't ready to return a phrase there. If you have a better way of putting it, please leave in the comments. Please like, share, subscribe, put all that cool stuff, hit the notification bell, share this out to anyone that needs to hear this, that, if you're invested in a project that's heading in the wrong direction, your investment is not supposed to be the love of your life. Okay. The only way to make money is by selling an investment at an upside or investing in something else that's going in the right direction. So a lot said today. Looking forward to hearing your feedback on this one. But with all that said, I'm going to close the door on the bureau, say follow leader one more time, and I'll talk to you soon. Take care.